All right, let's get this started. Can you guys hear me?
Yes.
Yep.
And are you able to see my screens?
Yes.
Yeah.
All right, cool. So the idea behind this is all of our chats and the messages that I've been getting, we got some traction on the market direction, right? Still, there are some ideas, some confusion around when not to trade. Let's get into the details on that, but also the topic of this conversation will be, how do you pick stocks in the current markets, right? Most of the time, what we hear from other people is what we end up looking at, right? But also try to get creative and say, how do we get into those that are actually picking up right now? Let's see, let me see if I can find more or less like an analogy, right, to explain. Um, let's say you're stranded in the airport, right? And all flights are canceled, right? So it is like, consider it like a market crash scenario, right? Everybody is stuck in the airport. Now there are only limited flights taking off, right? And the flight can only fit so many people, but there are so many passengers waiting there. So what would happen is the airlines they're going to select a certain batch in every flight. So what would typically happen? The first batches that will go through will be all the elite class members because they are loyalty members, right? So the first batch that goes through, you need to figure out, all right, what could be the first batch, right? And this is the batch finish. So in the markets also, there is always a first batch. Those were companies like the Amazons, the Zoom, and those kind of companies. They took off, right? But does that mean, you know what, the markets picked up, we lost, we should have gotten to those elite stocks, right? No, then you go back to the analogy of your airlines. There's going to be another batch, right? Because there's going to be more flights. It's probably not the same day, but there'll be more in the subsequent days and weeks. There'll be more and more batches coming through, right? So if you look at that same concept, there are more and more stocks that are going to pick up when the time comes for them. Just because Tesla picked up, Amazon picked up, some of the other ones picked up, does not mean that we are done or we lost the boat, right? There's always another boat coming through. How do we take that next ride? So if you try to go with those that I've already picked up, moved up in the market, you probably will not make much, because once that reach that level, they reach the destination, it's probably going to go sideways. Now you need to start looking for new ones, right? So how do you find new ones? So that, I don't know, any questions around that analogy, what I'm trying to explain here?
Nope.
Right. So simple story, right? That's exactly how you get your batches. Same thing if you take another example, right? Let's say we are in a 10, like a 100-story building or something, right? And then they say, here is the situation. Everybody has to vacate the building because we have some emergency thing, so and so, so and so, so and so, right? They get everybody off, you get down. So everybody's down on the reception area waiting, or on the outside. After the whole thing is done, all right, now let's get back to work. What do? We have only a few elevators. Everybody cannot fit in the same. You take turns, right? Or goes up, right? That's the first batch, second batch, third batch, until the whole thing clears up. Or maybe it may not be their turn. You just return back home because it's end of day. That means they're never going to get back up on that day. So let's think about visually, or imagine that way. How do you pick these kind of batches? So today, the focus is not to go with those outliers like I was talking about last time, and say, how do you pick those that are ready to take off? How do you find these? What we will have to see, part of these analogies, is there is no restriction on how many can fit, right? The idea is, even if they're taking off, even if they're halfway through, there is still room to make money on that, but you need to identify those. Let's take some basic examples, right? I keep using Amazon because I've had options in that one, and I've done PayPal. PayPal is about 250% or something on my options. Now, the point is, did we miss the boat? Oh, you know what? I should have been in PayPal. I should have been in Square. I should have been in these things, because I sent out a list on our WhatsApp group and said, here are the options. And some of them are like 100%, 200%, 250%. When I got out of Amazon, it was about 130, 40% or something on my stock options, but I was close to 200%. Things didn't really go on their quarterly earnings, right? Things of that nature will happen, but just because you missed the boat on those does not mean they are the only ones. You got thousands to work off of, right? Now, last time we also discussed a couple of them, right? Like the cruise lines. And then we talked about airlines too, right? We looked at Delta Airlines, we took a look at American Airlines. This is what I would say. If you try to pick those, it is perfect, right? But it's not the time yet, right? Uh, but the reason I say it's not the time yet is they're still waiting. If you go back to both of our analogies, they're still in the queue waiting for their turn to come. So why do you want to invest in those companies? And I would call it like an investment decay, right? You're losing time, value of your investment sitting into some companies that are not ready to take off yet. So I want you guys to think about companies that are taking off to invest in. Once they reach the destination, get out and come back and find companies that are ready to take off again, next batch, right? But don't try to run around those that have already taken out, reached their destination, have already gone past the previous high of the crash prior to the crash, right? If you can, will they go up? They will go up. Keep a watch on the market direction like we discussed last time, right? Market direction is king. Most or 90% of them will flow with market direction. When the market changes direction, like the market crash happened, everybody takes a crash there. Everybody takes a hit there because the market's going down, it's crashing down. Their fundamentals are strong, everything is strong, great. They will perform well even in bad market conditions, but they will all take a hit because there is that a fear in the market that people will take their money out of the market, or there's a lot of shorts happening in the market. You don't have control based on the market currents. So you just have to flow the market. That'll be my guideline. Don't look for those that are going to be exceptional, that are going to make a difference. Stick to the market direction, less maintenance, less work to do. The market direction, stay in, stay out. But what stocks do you stay in is what comes into the picture now for today. All right. So what we'll do is let's keep this as practical as possible to look through charts instead of any of these slides that I have here. Jump onto the chart, see how I can help. I will go with what I have, and I will walk through some of the stocks that I've identified last night in my research and say, this is what I am looking for. Then we'll pick up some of yours that you have and say, what, does it meet the criteria, right? Like we have some in the chat that's listed on the ticker symbols. We'll walk through some of those in the charts and see, does it make sense? Is that batch ready? Is the theme of today's webinar. Good questions before we get into the charts?
Nope.
No.
No.
All right, cool. So let's get started with the charting platform. I will use TradingView. So everybody has access to this one. It's a free software. So
Eric, this is Alex. I don't know if it's just me, but I just see the presentation, the first slide.
I haven't switched yet.
Oh,
coming. All right. Are you able to see this one now?
Yeah.
Yeah.
Cool. And what I will also do is I will pull up the Excel spreadsheet. I'm going to share this spreadsheet on our group, but I'm going to, what do we do? I'm going to clean this up a little bit. This is going to be a lot of unnecessary stocks. This is like raw form. I probably have to clean this up, pass it on. But at high level, this is what I did as part of the research, right? Identify the company. It's got the name, the sector, the industry. I don't want to get into these details here, but high level, what I want to show is here are the list of companies that have come, right? And this has been their lowest date. So when you see 319, 323, right? Right about this time, some are exceptions here with the 4, 3, and 7. Right about this time is how far the market has crashed. And well, what is the high? I'm picking today, which is over the weekend, right? The highest for their pricing from the time they have been the lowest, right? What are they performing the best so far, right? So that means they're performing very well from the market crash, but at the same time, I would like to go off of current performance. That means they perform like 50%, 100%, but do they have any more potential to move up from where they were on their previous peaks prior to the market crash, right? When we look at the chart, you'll get an idea what I'm talking about, right? But that was the whole theory behind this one. Identify all those companies which had performed exceptionally well before the market crash, but now is the current time that it could be in that batch where it is taking off now. And it has enough potential still to move up. It has not exhausted its potential yet. Cool. So let's start looking at some of these. OMAB, right? So I'm going to jump back here and say OMAB. And let me give you a little background for those that are not too familiar with the charting. Let me zoom this up so we can see this clear enough. These are indicators at the bottom. The one is MACD here. This is one of my custom indicator in the bottom that is not available through the software. So if you're trying to look for that, you will not find it. And these are all candlesticks. Instead of going off of line charts, I tend to keep it at a candlesticks pattern here. What do you call these? Candles. You have other forms that you can put, but my preference is candlesticks. And the yellow line is one of the indicators that's called average true range trailing stop. So if you guys do not know when to get out, when to get in kind of a thing, this will give you a guideline to say, all right, if you entered right here, where would you get out? When the price crosses the yellow line, just get out. Don't think twice. Don't do any extra analysis. These are times that will make life difficult because it's going to go up, down, it's sideways, it's going up a little bit. There are different ways, strategies that you can trade. But for the purpose of this webinar, what it is the market was up here for this particular stock, OMAB. It is Grupo it's Spanish Airlines is what I can tell. It is 19th February was the highest, and 23rd March was the lowest. So if you quickly go back into SPY, which is S&P 500 ETF, I just wanted to see, is this following the pattern? So if you look, 19th February was the peak out here, and this one was the bottom, which was the 23rd. It is exactly mimicking what the market did. So S&P 500 is what we use as benchmark for market. But if you look at this to this, the market is picked up quite a bit, more than about 50% from the time it crashed. But when you go back to OMAB, this is the first time I'm looking up this stock actually, OMAB, and then we notice that it has crashed quite a bit, but it does not really pick up 50%, right? What we want to see is how do we identify those that are ready to take off? I want to build a batch, which I call it as a basket, right? What stocks do I put in my basket this time around, or this week, or this current market conditions to say I need to perform better? Let's look at some of those that have taken off, right? From the chat, I have a few of them, the ticker symbols. Let me use some of them. You guys were talking about W. Very good one. If you picked up and we're on the right, see, this was the market crash from here to here. But when you run the same logic, identify, hey, this is the one that's taking off. This was in the very first batch, right? This was at the time where the market just about started recovering, but it took off like crazy up from $40 all the way to 188. Now the question is, do I have to get into this? Different ways of looking at it. Will it take off? It may still take off because it's still when the very high. Expensive now compared to where it was $40. Now it is $188. Do you get into this now? Right? So different school of thoughts here. My point is we do not know its potential yet because it's at the highest historical. How far it will go, we do not know. But let's go back to one of these that I had selected. Based on this, do you think there's potential for it to go up? Yeah, it's been there before, right? On the 19th of February at $67. Do you think the 31 can get to 67? It may, but there is a high potential for it to get there because it's now starting to pick up. It's probably in that batch. The reason we use the basket is we put about 30 stocks in the basket and do it. Even if half of them move, in the right direction and move up to their previous highs is good money if the rest of them even move sideways, right? So what I'm looking for is an average return. I'm not trying to look only those that are like exceptionally performing well and only stick to those one or two. We want to diversify and keep going, you know, step by step in the right direction. I don't want to do all into one stock, right? This was one I talked about last time. If you see this yellow line, this is where I had gotten 1910 when it was at the highest. This is the place where I was a little off. I was in stock option, but I got off, right? But once again, the point for this webinar is it was here before the market crash brought it down to here, which is 1649. You took the ride, right? The ride is over. For me, the ride is over, right? I picked up when it was the right batch, the right basket. I put it in there, did the ride. It went all the way down up to here, closed it. Now look for another batch. Is this going to take off any further? It could. But would I be more comfortable in picking those that are ready for the next batch? This is a different story, the destination. Now it's gone back to the fundamentals and the rest of the story. It needs to be traded differently. It's at a different ball game at this point. Now, sticking to our strategy, what we're trying to look for is find the batch here. Which ones are the ones that are ready to take off now? Then switch the batch again. They take off, come back in here, find the next batch. Let's look at Delta Airlines, right? This is one of the things. Is this ready to take off? It's not there yet, right? This is an old one that I did a short on that with it to go down. So there was some money to be made going short. Anyways, this is still at the bottom. Is this ready to take off? It's not. But even if you put it in your batch right about this time in April 29th, you will drop it off of your batch after a few days because it's not performing well. But the rest of them would take off, right? Let's look at RCL is another one on the list that you guys put on the chat window. Is it ready to take off? No, it's not. But the companies are strong. These are big companies, right? But it's not the time for them to take off yet. So hold on. Let's go to what is taking off, pick that batch, come back later on and see, is this ready to take off now? When it is ready, then you do it in batches. It's good for you. If everybody goes in one direction at the same time, your opportunities will die down after a period when everybody takes off. But this strategy is always helpful because you do one batch, you go to the destination, come back, find another batch. So keep going as long as the elevator story that I told, as long as the elevator is functioning, the office is still open, right? Markets are still open. Keep going, find out that batch because it's going to go up. It's going to go up because the fundamentals are strong and they have been there. Historically, it's proven that previously at in the early part of the year, it was at $135. Would it get back to $135? May get back, may not get back. Will it recover at least 50% of it? Yes, there is enough room to make money there. Now, the question will come down to profits relative to time, right? So watch for those things. I'm going to quickly walk through some of your BA is a very popular one, right? So it kind of gave that signal that it's taking off, but then what happened? All of the investment that people have started getting into it because it's such a popular stock have for the whole month from the 30th of March or somewhere end of March all the way into April, your money was just sitting there, the investment not making any money for you, right? But if you picked up the right batch, all of those have been moving up, but here you're sitting, your thousands of dollars invested here hasn't made any money for you. That's what I'm trying to call this an investment decay because there's not much you're making. The purpose is to make something. So don't go off of those outliers that you think it's one of the cheapest ones. It is cheap, but only find those that are ready to take off, even though it is cheap, right? Let's look at something else. PXT seems to be a popular one in the group here. So let's see what it is. Yeah, this sounds like a good one, right? Ready to take off. This is at its peak from its previous crash and its performance was very good. Early part of it, 159, you're at $90. It's still a little bit expensive, but it's a good one to get into right now. But also watch for the market direction. When the market direction changes, doesn't matter how good they show, it's all going to go down. So stick to the market direction that I've been publishing on the WhatsApp group. And let's touch base a little bit on that later on, if there is any confusion on understanding how to use market direction for our trading on day-to-day basis. Let me use something else here too. Tesla was somebody's preference. Tesla is a good one. It was ready to take off in this time frame. If you miss the boat here, there is still a little bit of opportunity, but do you want to stick to this opportunity, or you want to find those opportunities that are right here, ready to take off? This is halfway through the flight here, right? So 819, this is an expensive one unless you guys are doing options or you have that kind of an account balance. I would not prefer that one. Otherwise, your entire account balance will go just into one stock. Lululemon, this is always a crazy stock. Look at the way it picked up. It dropped from there to 64 all the way 127. This was the area that was taking off, and it is at peak. Is it still a good stock? It's still a good stock. You still have a little bit of gap from a previous peak, but this is one I would say it's already way taken off somewhere end of March, like over a month ago, right? This is the time we should have gotten if we use the strategy correctly. Right. By the time you realize this one was another one, right? Wayfair that we were talking about. Look at this. This was the time it was taking off. If we miss this one, is this the right time to get in right now? Different ball game. Like I said, I wouldn't touch any of these stocks that are this far away. It might still go up, but stick to market direction. If you're there, 188 is a bit expensive to get into. Let me see.
Can you check the
TRN.
BioCrest DCRX?
DCRX, BCRX. All right. See, this one right here was the pickup time, right? It went past the previous peak of the crash, right? So once it moves past that one, it could go up. But like I said, your strategy, your rules would be different. If you still stick to that, I will watch for some of these yellow lines here to give you your trailing stop information, or watch for market direction just to make sure you're not trading in the opposite direction. So let me get back to some of what I was talking on, right? OMAB was one of them. OMAB, right? Is good, $31, reasonable, ready to take off. Yes, it's at that point, it's ready to take off. I would add it to that batch, right? How far? As long as it stays above this yellow line, which is my trailing stop line, or as long as the market direction shows good to go. Let's see what else we have. PEN, it's in the hotel resorts business. It's called Penn National Gaming Inc. I rarely look at company names in general, but let's look it up. That's the correct name of the company. Look, it's huge crash, right? It did a little bit of sideways thing, and it's right about there to pick up, right? Good one, $18, reasonable. If you go SPSC, I've gotten to this one on stocks, I think, on the options, I think. Is it the one Virgin one? No, not options, must be regular. It's only 20 bucks. So it's been going a little sideways, right? I've probably gotten somewhere here, got a little bit of profit, but if it doesn't move too much, then probably not the one to hang on to. There was a earnings report, estimate 15, surprise this one. It's in red zone. So some of them I will filter out and watch for, let's see, BYD, right? BYD, look at this one, sideways too, picking up. It's at its highest point at this on this day of 8th March. 8th March was a Friday. So right about to take off. So when we put it in a basket, not everyone may take off, but on an average, most of them will and stick to market direction, because once market direction flips, everyone's going to go down. So you may want to change your position sizing there, scale down a little bit, or if it's moving up, scale up, keep moving up and continue with the same basket, or find similar companies that are helping out in this market condition. MIDD, right? I've not sorted these out, but just to give you a background on the kind of companies they are, the market cap is, what is it, a billion, 1.1 billion right here. This is close to a billion. This is 2.2 billion. These are all going to be mid cap and large cap kind of companies here. So the fundamentals, the foundation of these companies are pretty strong. They're not going to die down or go bankrupt with the current situation they are in with this kind of a market cap and the performance that they've had until the previous market crash, right? So these are pretty strong ones that we can trade on. Let's pick another one. MIDD. MIDD. So if we clearly see this was the sideways movement ready to take off, right? It's broken down the resistance level right here, moved up the yellow line. It's up $64. And what I would also want to show is MIDD. How much did it pick up? Current performance, it moved up about 50% from its previous lowest point, right? The lowest point was about $41 right here. And it picked up about 50%, bringing it up to $64. How much more potential does it have? It still has about 100% potential. That's how my program has put out this spreadsheet here. Now let's go back and validate if that is correct. Say this one was the lowest point, $40 something. It's moved up to 64, right? That's about 50% from $40, right? Another $20 is about 60. How much more does it have to go? 62, it's got a potential to go up to 127. That's roughly about another 100% to move up, right? Would you be comfortable picking up these stocks, or would you be comfortable picking up those that have already crossed the previous peak? Let's pick OSB. I don't know these companies, nor board. All right, then I just go off of the industry if I need to, right? These are basic industry, forest products, right? Would we ever think about trading forest products if we're just going off of what people talk about or what the news talks about? But look at this guy, right? It was at $8. It already moved up 100%. Let's see what my spreadsheet says here. $9, it has already moved up about 91%, and there's a potential for it to move up another 90%, right? $17, reasonably priced. Does it have a potential to move up to $33? Of course it does, right? So a few more, then we will open up for questions. TMHC, or I'll try to get those that seem to be more familiar, and I will also try to pick those that probably should be avoided because there could be inverse ETFs and stuff. All right, same thing here, right? Market crash from here to here, pretty well, $6 all the way to 18. Let me see, I'll get better information from here. So it was $6. It moved all the way 146%. How much does it have? It has another 80% to move up from the bottom, right? So $15 all the way to here, reasonably priced, right? Very strong stock, ready to take off, ready to take off. Cool. Let's figure something that we are already familiar. Dish Network is a popular one, right? I had this in my bucket last week, over a week ago, I think, somewhere in this time frame. Now is the time. It's perfect that it's picked up. Look at the size of that candle compared to the rest of the candles. It's got the right momentum to take off, and it's already in the long direction. And I've had it from this time, given sideways, not too good, but at least it's in the positive direction to take off. So I'll still hang on to that one. You may go back and say, you know what, I don't trust Dish. This is something that's not having future potential. Netflix and these companies are going to take off. You may have your personal opinion, which is good, but I will not be biased with my personal opinion. Then I will go back to the chart, look it up and say, you know what, if that was our opinion, why would it be at its peak at $42? There is something going on that I do not know, right? I would just go off of my chart analysis and put it into my basket, as long as it's performing.
Sorry, I think you had Toll over there, number 9 or number 8.
Oh, cool. All right. If that's familiar, let me know. Oh, Toll, Alex.
Yeah.
Toll Brothers. All right.
Try to get something out of this house. So.
Absolutely. There you go. See, let me go back to the spreadsheet first. Toll, right? These are all home building ones. Yeah, I forgot about that one, that you're into this line of business here. The lowest point was 1337. The highest it hit is 27 on 5/8, which is last Friday. And the current performance has been 100%. That's really good. How much more does it have? 80% more remaining, and it's on the top of my list there. I will definitely add it to this bucket. It's at its highest peak from the time the market started recovering. How much does it have? From $27 all the way up to $50. Easy ride, right? If we know it has been that strong before the market crash, everything has been picking up in that real estate side of the business, why not here too, right? $27, get into this one, you have up to $50 to write or even pass. Watch for this as a guideline to use it as a trailing stop loss line, or look for market direction. When it changes, get out of it, scale down, find another one.
Right, perfect, thanks. Yeah, but basically on all of the things that we have seen here, based on the potential, anything between 60 to 100%, obviously based on market direction, but the moment like you start seeing things going down, then at that point we just switch
Yes.
to the next
Right.
one. Okay.
Switch to cash or reduce your positions so you don't take a lot of losses. But I would strongly recommend stick to market direction. That's why I've been diligently publishing that information. We will spend a few minutes after we review the list on once again touching base on market direction and how do we trade that correct. Because there were some questions on, hey, there's a green, there's a red, which direction do I go? Yeah, let's touch on that briefly. What else? Anything familiar that I'm skipping, let me know here, all right? Because I'm trying to go with those that are kind of popular. See, TQQQ is one of those triple ETF ones, which is really good for day trading, actually. I always monitor this. If you see that, you already see some of my analysis put in here. What this is a Fibonacci series that I put here from the top to the bottom. If you see halfway down, 0.5 is 50%. It is almost touching 50%. That means when the market's going up and you do not know what to trade on, just go off of this one. It's ProShares Trust Ultra Pro Triple Q. When NASDAQ moves up, this moves about 3 times the percentage of what NASDAQ's move is, right? So was this the right time? This was the right time somewhere about here to get in. Is it still the right time? This got enough potential to move in. This is exactly the track how NASDAQ moves, in general, how the market moves. So if you're unsure on what stocks to pick, you just want to clearly stick to market direction. I won't look, research further. I don't have time to run my programs and stuff. I just go here and do some day trading or get into this on swing trades. Pretty good sign here with the market direction. There will be another one called SQQ2 also. This is an inverse ETF, right point to talk about it. When the market takes a turn downwards, this is going to go up. When the market's going up, this is going to be inverse, it's going to go down. So when the market started reversing right about the 23rd of March or so, this was the time frame, this is going to start going down. From $28, it went all the way to $10. That's about 50% profits if you know how to short the market.
So Hercules, this also allows short sell, or these cubes doesn't allow a short sell?
They will allow short sells too, but some of your accounts do not allow short sells, right? Which is where I'm saying, if it is a short sell, right? You go into SQQ, right? This was a short sell. Let me go back to the market, right? When the market was going down from here to here and you don't have an option to short sell in your account, take a look at these dates, like 28th February all the way to March, right? That's one full month. So you go back into SQQ, kind of a thing. Let me give you another one too, since we're talking about SDS is another one, right? SQQ is another one. There's a few more of them too. So what you would do is take a look at 19th of February, from there on all the way to the March 23rd. If your brokerage did not allow shorts in your account, you could have gone long on these because these are inverse ETFs, right? This is the Ultra Pro short. You go long in this direction and they do allow long, even if it's an inverse one, they allow long. So you get in right here, right? $17, it went all the way to $32, like about 100%. Of course, you don't take end to end, but even if you did 50% of it or even 20%, that's a lot of money within a month to play with.
Yeah, Hercules, one curious question.
Sure.
So, what is the actual reason when market goes down, this stock is going up?
What is the actual reason this one is going up when the market's going? Oh, this is how it is designed. What they do is, this is called an inverse ETF. Every time the market, they have this inverse one based on if the market goes up 2%, this is supposed to go 2% down. That's how they've designed it for those that don't have a short option in their trading accounts. So this has got nothing to do like a company basis, or like Boeing or IBM or anything. This is exactly mimicking whatever the market does in a reverse order. So you have an option to go long when the market is tanking.
Okay,
So
got it.
plus,
Thank you.
is there a way to know if it is like, right time to get in, or if it is too late to get in, even if the market is in the positive direction?
So too late to get in, depends on how much you're trying to get profits wise. I would stick to market direction. The market direction is good, but they are in their 52-week highs. That is how I trade. I don't look for bottom fishing where I say, you know what, let me find the cheapest stock. It's not about finding the cheapest stock. It's about finding that that's ready to take off, which means even if it is 52-week high, that means it's really performing well, which is why it hit the 52-week high, right? And will I get in? Yes, I will obviously get into those kind of stocks rather than finding those that are 52-week lows, because when you hit 52-week lows, does not mean that is the 52-week low. There could be another low that's coming up in the week, in the next week, in the next day, next month. Why do you want to get into those that are distressed instead of looking for those that are performing well in the market? I don't look for cheap stuff. I want to look for those that I can add premium that can give me the returns as quickly as possible based on time factor.
So if you go back to your sheet, right, there
Sure.
some of the stocks, if can you pick the one which is MIDD?
MIDD, technology stock industry. Perfect. MIDD. Right.
So this one has already made the move, right? So do you, can you still get in, or
Oh yes, this is the perfect time to get in, because all of the struggle right here to recover is already surpassed the struggle. This is the struggle we want to wait and see. This is in the queue at this point. Now that it is moved up the queue, this has been the benchmark that we need to look for, because it has performed up to 127%, $127. And the reason the market crashed is why it crashed too. Does it have a potential to move up? And is it moving up? It is moving up, and it does have a potential to move up. Is it a good one to get in? Obviously, yes, of course.
But in the recent, last couple of weeks, the whole index has been moving up, right? So every stock in the index has been moving up. So don't you think, this is the one which is moving with the index rather than its own, potential?
Good point, right? But if the index is moving, then you'll have to go back to the other factors there. Good question. What you will do is then you will say, you know what, this is a technology sector, right? Since the technology sector is moving, this is also moving. Good one, right? This is the same as using market direction, but further more specific in the sector direction. Now we go back and look at the sector stock. This is going up. Obviously, this is all the way up here, right? This is the S&P 500 technology sector. This is the entire sector. It's got a bunch of technology stocks in there. So your point is correct. This is, again, going back to market direction to say, if the market direction is moving this up, whatever is moving it up, it's causing movement in the market for the stock for us to make money, right? So would I get in? I will get in, but also watch for this sector if you're concerned about. If the sector is making a direction, downward direction, that is also going to make a downward direction. Market direction going to change, and that's going to move down. This MIDD is also going to move down, right? But at this point, based on the stock, is it moving up? It is moving up. Will I make a personal biased decision? Is it the sector that is moving this one? This one does not necessarily have the potential. I don't believe that, because at some point it had the potential to be up there at 127%. It will not be there for no reason, right? So that is my opinion on reading the charts, looking at sector, looking at market direction, and finding these that have the potential, that had performed good before the market crash.
Okay.
Cool. All right, I see two hands up. Shrikant, Anupam, you guys still have a question?
Yeah, I'll go ahead. So on that spreadsheet which you're gonna share, right? Can you add the 52-week high as well on this one on the start?
We could do that, but the performance of this analysis was to go off of what do you say? The last.
Yeah,
peak.
or the last peak price.
Right. The last peak is right here. The you know what? I don't have that one, but this current performance is from the bottom. Max performance has been here. Yeah, I can look that up. I'll have to rerun all of my stuff there, but let me see what best I can do there. Okay, what else? You guys have anything else?
So
Let me quickly.
how's the potential?
Go ahead, Anupam.
Yeah, how are you calculating that potential value?
Oh, yeah, it's easy. So this is the starting point, right?
Right.
So 128 down to here is the fall. That means this has been the lowest point. Lowest point, $41 to $60 is about 50% up here, right? But from this $60 to the previous high, 120, is the potential for 100% move, right? 60 to 120 is 100% move. Right. So that is where I'm saying there is 100% potential for us to move up.
Okay.
Would it move up more than that? I'm just going off of wherever its previous peak was.
Right.
Right. That's why I call it potential. I wouldn't say guaranteed. Right. All right. Yes.
Yeah. So Nitin here. So this spreadsheet that you have all the stocks there, right, that is for for a day trading or for a swing or for the long term.
It's swing trading. There is I would not go anything called long term, but it is definitely for swing trading, wherein you get in, wait and watch for market direction or any kind of trailing stop options that you may have, right? And you get out when the direction changes. If it keeps going up for a year, I would say it's long term, but would it go all the way up consistently for a year? Wait and see. I won't answer that question. You'll have to wait and see how it goes up.
So when you say it's swing trading, right? So even if that stock has potential and it's above its average true range, so based on the market direction, let's say after 4 days or 5 days, if it trends down, you're saying get out of it and then get back in because it still has potential to grow up.
Yes, absolutely. When the market direction changes, get out of it, but that does not mean you don't get back into it. When the market direction changes back on, figure out the ones, once again, the ones that are taking off, most likely it'll be the same ones that you already had in your basket. Right? All right. Lata, go ahead.
I just wanted to check one stock, Hercules.
Sure.
I just had a question on it, actually.
Go ahead.
So, SMAR.
No, I can't look at that one. No. Smart sheet. Cool. This is a very good one. Okay. At some point, I had it in my basket, I think. All right.
So this one, right? So you were talking about 52-week high, the stocks which have already crossed 52-week high. So now if I want to enter into this stock, like, where do I start, or where do I put my stop loss, or, is it a good time to get in? How do we find out on this stock? Because it's already moved a 52-week high, more than 52-week high, right?
Absolutely. So multiple ways of trading this one. If you're sure, or this is what you want to invest in, right? And you have that idea that there is a lot more potential for this to move up. Number one, like I always say, is market direction, right? Look for market direction. The second one is if you're a little bit skeptical because it's already moved up 52-week high, would it have any further potential to move up and you're not very sure? If your idea is to move about $10,000 into the stock, don't move all $10,000 into this yet, right? Move it into pieces, scale up. Move about $3,000 in there. See if the performance is moving up. You know what? It is moving, so there is a potential. Then you have that confidence move up. Move another $3,000 in, right? And the same thing, if it's not moving enough or it's moving downwards, start scaling out of the position and invest it elsewhere so you don't sit on it for too long. But on the other side, outside of market direction, also have some kind of trailing stop indicators that you could go off of and say, I'm ready to take my profits off the table now, right? So all of these will factor into how do you trade so you don't make any biased opinions. But what will happen is you get into this $56, it hits, let's say $65, you're in your first $3,000 for your investment. Psychology says that, you know what, it's already moved up to $65. I don't want to put another $3,000 in there. I'm going to take my profits and get out. That's what psychology says. But if you want to be firm on your decision before you enter, you say $3,000 now. Next time it hits $60, I'm going to put another $3,000 in. Market direction is going to support it. $65, I'm going to put another $3,000 in. That's how you have to play the game.
Okay.
All right. Let's see. Any other questions?
This Shrikant here. The sector tickers, right? Can you also share those? I mean, like, at least I'm not aware what are all the different sector tickers, like XLK for technology.
Oh, that's easy. You know what? Let me do another one and I'll show you, because I want to touch base on that. This is probably the right time for a segue here. Go on the sector comparison. And what I could show here is, where is that? Give me 1 second, guys. I'm trying to find something. I use this as an alternate tool on my templates. All right, let me try this one. Sector compare. I'm going to get rid of this one here. You still are able to see my screens?
Yes.
Yeah, we can see.
So I'm going to zoom this one in. I'm going to answer 2 questions here. I'm going to start this chart. See, the March 23rd is here. I'm going to zoom in a little bit here so I can get close to March 23rd. Right? So first question to answer, what are the sectors, right? Here are all the sectors, right? How do you Google them and find them? It is called SPDRS, spiders. And that is the website. You will find all of the sectors, industries, and also the underlying symbols that are part of that basket, and what are the holdings within that basket within each of those sectors, right? So here is another way to trade. And that was one of the questions when we first started prior to our recording here, and say, you know what, how do we know which sector do we pick? How do we know what to trade? If you took, let me close this, but allow me, all right, hide for now. From March 23rd on, let's see, this is April, March 23rd onwards. I'm trying to find this date here. If you guys are saying, what am I trying to do here? So from this time on, when you know the market is recovering, all right, this is a fixed value that I have in the bottom, right? And if you look at XLE, it's got 50%. And if you guys don't know what stocks to pick and what to trade, just go off of the comparison charts like this. I put an S&P 500 value in here. You see the shade there? That is called an area chart. So I did an area chart and I put S&P 500. That is where S&P 500 is right now. It's at 27% from that time that I picked for comparison performance that has happened from the time I've taken that date. 27% up, but how do I pick those that are performing better than the market is doing? When I say better than the market, better than S&P 500 is doing, right? Anything about this 27% are the ones that are doing better, right? Now you say, how do you get into these? You fix a date there and say, this is when the market crashed, a recovery started to happen, right? Even if you say you did not trade any of these time, I want to have confirmation. The first dip that happened, you start getting into it, right? You got into the first one here. Whatever is the yellow line? Yellow line is XLE. You see this XLE on the top. XHB. XLE is energy sector. HB is home builders sector. So get into that one. As long as that is number one in the race compared to all other sectors, you stick to that one. When it drops, moves out, there is another one that will be the number one. Stay on that one. Then XLE picked back up. It stayed number one in the game and it kept moving up. But look at this one. Can you go more than one? Yeah, you could probably go about 4 or 5 of them on the top 4. and figure out which ones are top 4. And every few days, few weeks, I shouldn't say few weeks, but every few days or a week, keep looking at the top performing ones. And you know what? You will be there about 50%. And this is from March, end of March to almost being, this is about 45 days time frame, right? So that is one simple way to do that. So somebody had asked me a question, how do you know which sector is performing? Every brokerage will have something out there for a watch list concept. So add all of these into your watch list. Those are sectors, right? And sorted by the performance for the day, net change value and performance. And if you sort it in the descending order, it's going to say which sector has been performing well for the day. So you can stick to those. And then if you want to know which ones within that sector have been performing well, you go into that Spider's website, identify all those holdings. You could do the same thing, create another watch list with all of those holdings in there, sorted by the descending order by performance for the day, and say which one is actually moving this sector, right? Maybe it's just about 3 or 4 stocks that are moving the entire technology sector, not all of them. So if you want to go into those individual stocks and get a better percentage performance, you can pick those individual stocks. That is something that I do, and I have that automated, that it runs on a daily basis and will spit out and identify. I don't do it at a sector level, I do it at an industry level. And industry is for the subset of the sector, and it identifies all those stocks that have been moving up and has been moving that industry up, and who are those drivers. Can I take the top 5 in each of those industries within the top performing industries and create a basket and trade it for a week? Next week, numbers will change again. There could be another winner, another industry that is kind of taken on the race. Then say, all right, run it on the new industries and find the top performing stocks on that one and create a different basket for the next week. Right, did that answer the question on the sectors? Which ones are these? This one is here, sector performance. Now comparing to what we do and the sector performance, right? I would say our logic is even better, right? I wouldn't say far better, but better than the regular sector performance, because for us, if you consider the whole market as one sector, just as a market, you're looking at everything that has been performing better and has the right kind of potential to move up. So they are having all sectors in there. They're having all industries in there. But if you say, you know what, I don't trust the oil sector now, I don't trust this, put a filter in and remove them if you're not comfortable, right? There's about 100 of them right here, right? Would I go into all of them? See, some of them in the bottom here show that only have about 20% potential. This just means that this is a potential for 20% to 30% from the previous peak. Is it going to surpass the previous peak and go forward? It would, it can, but at least it has that much potential to hit the previous 52-week high from where it stands today, right? So this is the kind of story that builds up into a strategy and goes into a program, and you get results like these. So if you can think of any other stories like this, right, that could make sense logically, we can build programs and come up with baskets. One of the other ones I mentioned in our last webinar is, which one was that? The basket that I created called the fast recovery basket, right? What was the story around that? The story around that was, you go back to the last market crash, right? And identify from 2008, 2009 timeframe when the market crashed, which ones were the first ones that recovered in the first 3 months, the fastest recovery percentage-wise that it had, right? Easy, it's historical data. You go there, identify all those companies that have done 100%, 200%, 300% returns in the first 3 months. Can we build a basket for that and see if it's going to perform the same during this market crisis? 50% or more of those are going to perform, and the remaining are also going to perform, right? But it may be time consuming. It may not happen in 3 months. It might happen maybe in 6 months, in a year. But is the basket strong? If you believe the story is correct, the basket is strong. Right, all right, Shrikant, you have a question?
Hey, this is Sri Hercules.
Yes.
So I have a question on, you mentioned that whatever is 50% recovered, we can get in now. And when the market crash, it's better to sell it out and take the profit.
Yes.
So just want to check with you. So you mean when the market crash, we need to get out. So should we wait for your WhatsApp like input daily
Yes.
basis giving how many reds and green?
Yes.
Is that indicate market crash, or we need to watch out the market news?
No, that is market crash. Everything goes into red is market crash. We'll touch on that. I'll take a few minutes on that one, Shri, in a little bit.
Okay.
Then we'll see how do we interpret those greens and reds. All right. All right, Pargan.
I just want to check this sector comparison. Do you run it every day or every week kind of thing?
Sector comparison, let me not get confused here. This is sector comparison, right? These are all the different sectors. So this one, you can do it anytime. You can just put all these things. It's called a compare chart here, right? You put a compare and you put some other industry, XNTK, for example, right? If you put this one, this is another technology industry. I'm mixing an industry with the sector there. And see here, XNTK popped up here, which is one of the top 3 right here. So you guys can use tradingview.com, create a free account. There's going to be ads flowing on the bottom here if it does not bother you, right? Put S&P 500 on your chart and put this compare and add all of these sectors. And this is going to be the chart that's going to come through. This is not my software, right? This is available for everybody. But if you're referring to this one as performance and the potential, I've not run this for a couple of weeks now. The last time I did this, I can vouch for this, that my performance based, because the market direction was also, it wasn't like all greens you may have seen in the WhatsApp group, but this is performed about 20%, maybe 15 to 20% from the last time I put the basket in on this one. So which is reasonable for about close to two weeks or so. The 20% will include my stock options. So stock options, you make a lot of money or you lose money. So you'll have to be really careful on the ones that you pick for stock options.
Yeah, we are taking baby steps, all learning, so not in the options yet.
Right. You know, there was some interest with some of our people in here wanting to do options. They've done some. My way of doing options may not align with everybody's way of doing options, but my way works for me. If your way works for you, stick to the rules. Right. Okay. So if we don't have any questions now, we can get into the market direction briefly before we wind down for today.
Please, I have one question. So how are we identifying? I mean, I understand we are looking only at the charts, and by saying that, hey, this, like, let's say, you said that the building sector is number 2 at from what we see in the S&P, but all this, I mean, I understand this whole trend is giving us the answer. I mean, we don't need to see the news because what is happening, the job losses and all the economic sector is turning back. But is it, I mean, can it go down, or like, that's what it is difficult to relate. The fact, what is happening, and as well as the data, what we have in front of our eyes. So,
right. So this goes back to my presentation, where you will say, is this, what was the next slide here, right? This goes back to market direction versus market conditions, right? So if you look at market direction, it's been going up, right? It showed green in our WhatsApp group. We have one more life. If you have to correlate this to more of a video game analogy, right? It's like you're playing your games. You have about 5 lives, let's say 6 lives in our case, right? We have 6 colors going on. So you have 6 lives in the game, and we are playing with the last life, right? 1 green, 5 reds, right? It's still long, but that's the last life that you have in the game. As long as it pushes it up, I didn't check Friday. I will post it on our group once I find that. But once it goes back, as part of your game, when you're doing better, your lives come back on again, right? As part of the video game. So you get more lives. So when you get into that zone, that means you need to scale up and move up, because now you can take more risk because there's more life in the market, right? So would you go off of market conditions? I will not go off of market conditions to trade anything, because if you have that fear that, you know what, the unemployment rate is so and so, right? This is what came up on Friday. Unemployment rate is still too high. But what happened? The market moved up, right?
Yes.
Everything moved up. So why do you want to go off of market conditions that is giving you false information rather than sticking to market direction, right? Which is where I'm trying to post diligently there. So we stick to market direction and not get into that concept of fear just because market condition is different from market direction. How long do you go, Anupam, to answer that question? As long as the market direction shows it positive, green.
Yeah, exactly. Like the housing sector, right? That shows, but I don't know who's buying houses with all unemployment, right? So that's
right. Maybe there are a lot of investors are getting into the market in case the market's gone down. This is home builders, all right. HB. You have to. There's multiple. There's a lot of criteria there, divisions in there to say what constitutes this sector, right? If it's home builders, then it could be like Home Depot, Lowe's, those kind of companies, not necessarily the real estate kind of housing companies like Richmond Homes or things like that.
But I saw that Lennar is in your list and it was the top 50, and DR Hot and DHI and a couple of more building companies which are basically home builders. Lennar, Alien, I swear, and it has been doing good. Alien has been doing good. So based on it was in 50th position, yeah.
So why do we make decisions for a company that we are not familiar with on their fundamentals? If the stock is moving up, all I would assume is they're doing good. If they're not doing good and the stock's doing up, I'm doing good because I got into it.
Correct.
So it's all about it. But if you're not comfortable, like one of you said there, right? Who's going to buy houses in this market condition? All right, filter that out, remove the home building thing. We have Alex in the group. He's from the home building side of the functional group on the IT side. That's the reason he asked on TOL, how's it doing? Doing good, if you ask me.
Yep.
I have Nitin and Siva. I think they are from Mohawk. They are from the home building industry. I mean,
right?
Pretty much.
It's a different form of home building there, right? On the Mohawk side. So
yeah.
Which one was that?
MHK.
MHK. Because I have this talk in one of my
it was baskets. In your list you sent. Yeah, basket list, it was there.
It was there, right? So this basket that I posted last time is the fast recovery one, right? So this was one of those companies that recovered extremely fast within 3 months of the market crash recovery. And that is why it's in that basket. So if it had that kind of a historical performance that it is proven in the past that it can recover fast, does the story align right? That it will recover now? We have to believe that, right?
Yeah.
So that's the reason I took a chance and I got in somewhere in this time frame here. It's doing fine. 84, does it have enough potential to move up? I'm at 142 last time. It still has about another 80% to go, I would think.
Yeah.
Yeah.
Right. So if you guys can think of any of these stories, right? I say, I have this analogy, this happened in the past. This could happen again. Give me a story, then we will see if we can write a program around it and come up with results so we can share it with the group.
Okay.
So instead of just going off of the symbols that you guys listed here, right? Boeing is I don't like a statement when someone says it's a cheap stock to buy, right? It's a strong stock, but it's a cheap one to buy. Understand? But cheap, when does it take? How long does it take to become expensive or add that premium from cheap to expensive? It's a matter of time, right? So I would want to wait until, this is again going back to analogies, right? You're in an entertainment park. Let's say you went to Disney and you're sitting in a certain ride, right? It's one of your favorite rides, but you're sitting on a ride that is on a break right now, right? How long will you sit on that ride and waste your day while the rest of all rides are still on and you're not getting onto another ride because you want this one and you're waiting because nobody has started this ride yet? Finish up, go on the other rides, come back up. When this is starting up, get on this ride. So many analogies for today, looks like. So going
Really
back, what was that?
no, that was a really good example.
That was a good one. It stays better in our heads when we talk stories, right? So that's the reason I'm asking. If you guys have any stories that you want to share, to say, you know what, last time this happened, you know what, this is what happened. Can this happen? We can test it and see. That is hypothesis, right? When we write up our algorithms and see, then let's put that hypothesis to test and build a basket around that. Can we set aside some funds? Yeah, let's put some money around that and build that basket and see how is it going to perform.
So PXD, can you see that it's been energy sector, and it comes down, it moves very fast, and it's very really interesting share.
Yeah, there you go. See, PXT.
Yeah.
Sure. See, what I do is somebody asked me how soon am I running these things. I try to push this program a little bit. How do you say? To a limited extent. If I said, give me all those that performed good in last week, or on the top of last week, or within a certain percentage within the previous high, I would have gotten this one. What I did was give me the peak as of Friday, right? So when I say give me the peak as of Friday, then this may be there, may not be there, because if this is the peak that would have considered, this may not be in the list. But let's look, PXT, right? All right, see, I don't have PXT on the list. But if I had something like a additional intelligence to say, give me anything that is maybe about 5% to 10% from the previous peak that I can still get into, PXT will be on the list. But if you ask me, is it a good one? It is a good one to get in at this point. See, overall, their earnings also showed positive, surprise, 72 cents. So I don't see why not.
Okay.
But watch for them, because if you look at the energy sector, it's at the peak from the previous crash. It's about 50%. Right.
Douglas, how about the financial sector, like FAS and FAG?
Right. So let's start with the XLF first, right? Because that is the sector that talks about the basket that I created, the one that I shared with you guys, fast recovery. 50% to 56%, I think, to be specific, is financial sector, right? Generally it is midway on the financial side when they pick up, because the financials get really hit bad when the market crashes, right?
Okay.
But will it pick up? It will eventually pick up. Do we have that? Put some money out, break out your investment into a certain percentage. If you leave it out there, it will come up. So let's look at FAS, right? FAS, I've traded, FAZ, I've traded, depending on the inverse situation. So it is going sideways, right? Pretty close toward the sector mix there. But does it have a potential from $28 to go all the way to $100? I am sure it does, but is it the right time to get in? Once again, you have to go back to all of my analogies and say, is this taking off yet? If it's not taking off yet, is it worth investing right now? You may have this question to say, you know what, I may not get it for $28 next time I come in to buy this one. Yes, you will not get it, right? But you use that same money to make money elsewhere. So would you buy this at $32 when you have the confirmation to get in? Why not? Because you're already making money on the other baskets. In the meantime, I would rather buy it at a $32 stock when I really know it's moving.
Okay, got it.
Right. So if you go into FAZ, this is one of the answers for the group. This is an inverse one. If you guys say, you know what, I don't have an option to short the market, FAZ is one of those that will give you, I don't know what's going on here. There you go. FAZ is one of them that is going to help you out, go on a long direction and make money when the market's crashing.
So, Heckless, I have one question. If we don't know individual indexes, like individual stock, is it better to go with ETF like FAZ, which represents the complete sector?
Yes, yes, absolutely. But I would not put everything into one sector. Use go off of this sector comparison and take the top 3 or top 5, right? And see out of the 10 that we have listed here or more, see what are the top 3, top 5 performing ones, and then use those if you don't have the time and patience to go off of individual stocks.
Okay.
right? You can take the same one. Say, let's
Tyson.
say you say XLE here. Sorry to interrupt here. Let me show you something.
No,
quickly.
no.
If you do an energy sector here, right? Energy sector from here to here, if you really look at it, right? It is it really the top performing one? Maybe by percentage wise, right? But $22 all the way to $38, they're saying it's about 50% up. But does it have the potential to move all the way up here? It does, right? So if you look at XLK, the charts may be a little bit deceiving from the percentages there. See, look at this one, right? It looked like this one recovered more, but in terms of percentages on this chart, right? It looks like XLE is ahead in the game, but when you look at the charts, it looks like XLK is beating it, but percentage wise is what you make money on.
Got it.
Right. All right. Let me know. We'll take a few more questions, then we can wind this down, and I will post some of the information on the WhatsApp chat.
So I have one question. That I had purchased one share, that OCGN. That time it was around 0.8, 0.67. I purchased around 1400, and later it became only 24 shares. So what is this scenario?
Then what happens is, yeah, it
Reverse
is
split.
a split and reverse split.
That is what it has happened for me for the CHK.
Right. So when a reverse split happens, yeah, let's do CHK also. I think you guys talked about it last time in our webinar. We covered that. So if you have, let's say, 100 shares, right? When they do a reverse split, they make it 100, one share if they made it like 2 shares, right? Isn't that, yeah, that's the way you do the reverse. Let's see if there is a split here. You see this one? So the split was 1 to 100. So this was like really cheap in cents, and they're trying to bump it up with a higher value. Then they do a split here, or reverse split, should I say. So they move the price up, but they bring your shares down. But your end result of your investment will still be the same. There are rules around and what value you should be to be a part of the stock markets, right? If it goes really in cents, you'll probably be dropped into the over-the-counter markets and not be trading into the exchanges like NASDAQ and New York Stock Exchange. So at that time, they could probably do, let's look at JCPenney or something. I don't know if these guys did a reverse split too, because these guys have been suffering too. See, when it goes to about 17 cents and stuff, these are times when they do reverse split, move the value up to more like $1 or $2, but then reduce the number of shares that you hold. You may want to read up a little bit on that one, Sham, on splits and reverse splits. Same thing with splits. If the splits meaning that if you go too high, it's $100 stock. Apple did this several years ago. If you go like $500 stock and it gets that a lot of people are not able to afford it, you just do a split on that and say, all right, for those that have one, we'll probably give you more number of shares and do that split, but bring the price down for you. So others are able to invest so you can increase your market cap.
So, Hercules, in my case, it's a little bit different because they made 1400 share to 2400, but the price is same, and it impacted the total amount value. Earlier, it was around 1300. Now I have only $42.
You may want to check with the broker. Looks like you made money there, but if it went in the reverse direction and it's not displayed, you may want to check with your broker what's going on. Okay. I would personally not trade any of those penny stocks, Sham. That's my way of doing it, but check with your broker is what I would say. What happened?
Okay.
Right.
The Tyson food was also, we were, TSN. And
TSN, looks like you guys are all meat guys here. Let's see.
I'm vegetarian.
I see that, but you buy Tyson stock here. But cool. So is it a good one to get in? I think it is reasonably good in there, but as it crossed this level here, I would be more comfortable once it crosses this area. But at that point, it's going to be a bit expensive to get in, but I will have I would wait for confirmation than trying to get into a cheap one. But in this formation that it has, I think it's got that potential to move up, but look for the market direction.
And it has a good market cap also. I mean, I think 15 billion or 19 billion.
Yeah, this is a huge company. So we touched a little bit on market direction too, once again, to say if it is, when I put green in the beginning, that means the market direction is still green. It may be in the last life, it's still green though, right? But it changes everything to red. Does not mean the life will be lost one at a time. What it will be is when suddenly it becomes red, it can also become suddenly green, right? The next day. So watch for it. There will be times that you may be in, out more consistently than, but it does not happen that often, right? Especially with this current market conditions, it might change colors. It'll give you time before it becomes completely red versus completely green, because there is a lot of struggle. The government is struggling hard to move the markets up, the economy up. So I don't expect it to become 100% red like within a day. All right, cool. Sounds good then. Let's find it right here. I will share the recording in our WhatsApp group, put it on the YouTube thing to share the link there. So you guys have fun. Happy trading there.
Can you share that sheet also?
I will. I'll post that one. I'll probably clean that up a little bit because there may be some inverse ETFs and stuff, and I don't want people taking wrong direction. But take a look at that, make your own decisions and what you are comfortable with. This is based on my analysis that I gotten, and I told you the story behind how this spreadsheet was derived. Cool. Right. You guys have a wonderful rest of the weekend. We'll catch up next time then.
Thanks. Have a nice weekend.
Thank you.
Thanks, guys.
All right, thanks.
Thanks.
Bye.
Bye.
लो है पहले से इन्वेस्टेड